What if I told you that right now, some of Wall Street's brightest minds are zeroing in on two under-the-radar stocks that could truly change the game? These aren't your typical headline grabbers, but companies quietly making waves behind the scenes, catching the attention of top analysts and investors alike. Today we're shining a spotlight on two companies that are revolutionizing their industries. One is pioneering the future of autonomous delivery, while the other is transforming the world of finance with cutting-edge AI technology. Both are poised for explosive growth as their sectors evolve. These aren't just hype picks, they're backed by real tangible innovation and a growing chorus of serious analyst buzz. The excitement isn't just speculation, there's substance behind the headlines. In this video, I'll break down exactly what these companies do, why analysts are so bullish on their future, and what you absolutely need to know before considering an investment. We'll dig into their business models and what sets them apart. Let's dive in and see what the future could hold for these game-changing companies. If you're enjoying these deep dives into the hottest stocks, smash that like button to let us know you want more investing insights and analysis. Don't forget to subscribe and turn on notifications so you never miss an update and always stay ahead of the curve. Let's get started and unlock the details. First up is SERV Robotics, ticker SERV, a company that's turning what once seemed like science fiction into an everyday reality, right on our city streets. Imagine this, you order your favorite meal, and instead of a car pulling up, a sleek four-wheeled robot quietly rolls up to your doorstep, meal in tow. That's SERV Robotics in action, bringing the future of delivery right to your front door, no human driver required. They're leading the charge in autonomous last-mile delivery, tackling what's long been the most expensive and inefficient part of getting goods to your doorstep, that final stretch from the local hub to your home. Traditional delivery racks up costs. Think driver's wages, gas, insurance, and constant vehicle maintenance. SERV's robots cut those expenses dramatically, making delivery more affordable for businesses and customers alike. And these aren't just experimental prototypes. SERV's robots are already out there navigating real city sidewalks, using a suite of advanced sensors and artificial intelligence to safely deliver food and packages. Their technology is impressive, identifying pedestrians, dodging obstacles, and constantly recalculating the best route, all in real time, even in the busiest urban environments. But the real game changer? SERV's massive partnership with Uber Eats, one of the world's largest food delivery platforms. This isn't just a small pilot program. Uber plans to deploy up to 2,000 SERV robots across the US, bringing autonomous delivery to cities coast to coast. That's instant scale, and a huge vote of confidence from a global delivery giant, signaling that SERV's technology is ready for prime time. For Uber, it means lower costs, more reliable deliveries, and a futuristic user experience. For SERV, it's access to millions of hungry customers, and a direct path to rapid growth. The last-mile delivery market is worth hundreds of billions and growing fast. As e-commerce and on-demand services boom, efficient solutions like SERV's are in higher demand than ever before. Analysts love SERV's scalable model. Once the tech is dialed in, these robots can deliver 24/7, rain or shine, at a fraction of the cost of human couriers. No salaries, no breaks, no sick days. Just electricity, routine maintenance, and a fleet that never sleeps. H.C. Wainwright and other top analysts have rated SERV a buy, citing the Uber partnership as a major catalyst for future growth and profitability. But SERV's potential goes far beyond food delivery. They're already eyeing expansion into groceries, prescription medications, and retail packages. The technology is highly adaptable, and the need for fast, efficient delivery is universal, whether it's a hot meal, a bag of groceries, or a critical prescription. Some analysts have set price targets around $4, seeing big upside from current levels as SERV scales up and expands into new markets. The opportunity here? A fundamentally strong company, not yet a household name, but with the potential to become one as autonomous delivery goes mainstream. Of course, there are risks. Regulatory hurdles remain. Cities are still figuring out how to manage sidewalk robots, and rules can change quickly. Competition is heating up with other robotics companies racing to claim their share, but SERV's Uber deal gives them a crucial head start and a powerful partner. Execution matters. They'll need to scale production and deployment smoothly to meet demand and stay ahead of rivals, but SERV's roots run deep. The company spun out of Uber and Postmates, giving them unique industry know-how and connections that most startups can only dream of. They're not just building robots, they understand the complex logistics game inside and out, from route optimization to customer experience. The leadership team is packed with veterans from robotics, AI, and autonomous tech, bringing decades of experience to the table. That experience is crucial for scaling a high-tech business in a fast-moving, competitive market. Big picture, SERV has proven technology, a game-changing Uber partnership, a massive market opportunity, and strong analyst backing. They're not just riding the automation wave, they're helping to shape it, setting the pace for the entire industry. To recap, SERV Robotics is a top pick for investors seeking high-growth potential in the robotics and automation space. Their 𝗗𝗟𝗧𝗖𝗢𝗗𝗘 partnership is a clear, proven path to scale, with real-world deployments already underway. The market is enormous, the delivery problem is real, and analysts see significant upside as SERV expands its reach. While risks exist, the potential rewards could be substantial, making SERV a strong buy on Wall Street's radar. If you're looking for a robotics play with real momentum and a clear path to growth, SERV Robotics is one to watch closely. The future of delivery is autonomous, and SERV is at the forefront, leading the charge into a new era of logistics. Imagine a city where robots handle the last mile. SERV is making that vision a reality, one delivery at a time. Their technology is already proven in real-world conditions, navigating rain, darkness, and the unpredictable chaos of city life. The Uber partnership not only accelerates SERV's growth, but also boosts their credibility with investors, customers, and city officials. SERV's business model is built for scale and efficiency, with the potential to transform how goods move in cities everywhere. Analysts see SERV as a true disruptor in a massive, rapidly growing market, with the potential to change the way we think about delivery. The company's leadership and deep industry roots set it apart from competitors, giving it a unique edge in this high-stakes race. Regulatory and execution risks remain, but SERV's advantages, technology, partnerships, and experience, are clear. Investors looking for innovation, growth, and a stake in the future of logistics should keep SERV firmly on their radar. The shift to automation in logistics is unstoppable, and SERV is positioned to ride and drive that wave. SERV Robotics is poised to capture a big share of this trend, with technology and partnerships that set it apart. With strong analyst support and a clear growth trajectory, SERV stands out as a compelling investment opportunity. The next time you see a robot rolling down the sidewalk, remember, it could be your portfolio's next big winner, quietly changing the world one delivery at a time. That's why Wall Street is paying close attention to SERV Robotics, and why you might want to as well. Now, let's move to our second stock, one that's transforming finance with AI. Stay tuned for another opportunity at the cutting edge of innovation. Our second pick is Pagaya Technologies, ticker PGY, a company at the forefront of using artificial intelligence to transform the trillion-dollar lending industry. While many fintechs talk about disruption, Pagaya is actually delivering it, quietly powering a revolution that's changing how banks, lenders, and consumers interact with credit. Pagaya's AI network is a game-changer for banks and fintechs, enabling them to make smarter, faster, and more accurate credit decisions. Instead of relying solely on outdated FICO scores and traditional credit models, Pagaya's technology brings a new level of intelligence to the process. Their platform analyzes thousands of data points in real time, everything from bank transactions and employment history to spending patterns and even alternative data sources. This allows Pagaya to build a dynamic, holistic picture of a borrower's true creditworthiness, far beyond what a simple credit score can reveal. The result? Lenders can safely approve more loans, expanding access to credit for millions of people, including those with thin credit files or less than perfect scores. For consumers, this means more opportunities to get approved for the loans they need, often at better rates and with less hassle. It's important to note that Pagaya isn't a lender itself. Instead, they partner with banks and fintechs, providing the AI engine that powers smarter lending decisions. Once loans are approved, Pagaya connects them to institutional investors who are eager for new high-quality assets. This fee-based capital-light model is highly scalable and creates a powerful network effect. Pagaya doesn't need to put its own capital at risk, allowing it to grow rapidly as more partners join the network. The more lenders and investors that join Pagaya's ecosystem, the more valuable the platform becomes for everyone involved. Each new participant brings more data, more opportunities, and more liquidity, reinforcing the network's strength. The addressable market is enormous. Think personal loans, auto loans, real estate, and beyond. Pagaya's technology is flexible enough to power virtually any type of consumer lending, opening up vast new verticals as the company expands. Already, Pagaya has built strong partnerships with some of the biggest names in banking and fintech. These aren't just pilot programs, these are real, large-scale deployments that prove Pagaya's AI works in the real world, not just in theory. When major financial institutions trust a third-party AI platform to underwrite their loans, it's a huge endorsement of both the technology and the team behind it. This level of trust is rare in finance, and it speaks volumes about Pagaya's credibility. Analysts are taking notice. Firms like 𝗗𝗓𝗏 and JMP Securities have rated PGY a buy, highlighting its massive addressable market, early-stage penetration, and the potential for explosive growth as more lenders and investors come on board. The numbers back up the optimism. Pagaya's AI consistently outperforms traditional risk models, delivering better loan performance and lower default rates. This isn't just hype, it's proven with real-world data. Some analysts have set ambitious price targets, ranging from $25 to $35 per share, reflecting their belief in Pagaya's major upside potential as the company continues to scale and expand into new markets. Of course, there are risks. Macroeconomic downturns could impact loan performance, and the regulatory environment for AI and finance is still evolving. Lawmakers and regulators are working to understand how these new technologies fit into existing frameworks. Competition is fierce. Other fintechs and even traditional banks are racing to develop their own AI-powered models. The landscape is crowded, and staying ahead requires constant innovation and execution. But Pagaya's unique network approach sets it apart. Rather than competing with banks, they enable them, helping traditional lenders modernize and compete in the digital age, instead of being left behind. Despite the challenges, Pagaya's growth in network volume and the steady stream of new partnerships demonstrate the company's resilience and ability to execute, even in uncertain times. Even when markets are tough and credit is tight, Pagaya continues to add new partners and facilitate more loans, proving the strength and adaptability of their business model. Pagaya sits at the intersection of two unstoppable trends: the digital transformation of finance and the rise of artificial intelligence. These forces are reshaping the industry, and Pagaya is right at the heart of it. Their capital-light, network-driven model is built for scale, allowing Pagaya to grow without the constraints that limit traditional lenders. Pagaya is solving real, tangible problems for both lenders and consumers. The data shows improved loan performance, higher approval rates, and better outcomes for everyone involved. That's why top analysts are so excited about PGY. They see it as a rare opportunity to invest in a company that's not just riding the AI wave, but actually shaping the future of finance. If you want exposure to the future of finance, Pagaya is a stock to watch closely. It's a pure play on the convergence of AI and lending, with a business model designed for long-term growth. Their technology is already reshaping how credit decisions are made, automating what used to be a slow, manual, and error-prone process. The company's growing list of partnerships with major financial players is a strong validation of their approach and a sign of trust from the industry's biggest names. Analysts see a long runway for growth as Pagaya expands into new lending verticals and deepens its relationships with existing partners. The risks are real, but so is the opportunity. For investors willing to look past short-term volatility, Pagaya offers a compelling long-term story. Pagaya's business model is designed to thrive as the lending industry evolves, adapting to new regulations, new technologies, and changing consumer needs. Their AI-driven platform is a true game-changer for both lenders and borrowers, making credit more accessible, more accurate, and more efficient. Wall Street sees Pagaya as a key player in the next wave of financial innovation, and the company's momentum is only building. If you're looking for a high-growth AI stock with real-world traction, PGY deserves a spot on your radar. The digital transformation of finance is accelerating, and Pagaya is leading the charge, setting new standards for what's possible in lending. Their unique approach and relentless focus on innovation give them a real competitive edge in a crowded and rapidly changing market. As more lenders and investors join the platform, Pagaya's value only increases, creating a virtuous cycle of growth and innovation. The company's consistent growth, even in challenging times, is a strong signal that Pagaya is built to last. Many analysts believe the market hasn't fully recognized Pagaya's potential yet, suggesting there's still significant upside ahead. The next evolution in lending is here, and Pagaya is at the center, driving the industry forward with cutting-edge technology. That's why Wall Street is watching PGY closely, eager to see how this AI-powered disruptor will shape the future of finance. Two stocks, two revolutions, one in delivery, one in finance. Both are changing the way we live and work. Both are backed by top analysts and real-world results, making them compelling picks for forward-thinking investors. Now let's wrap up with your next steps as an investor. Consider your risk tolerance, do your own research, and think about how these trends fit into your portfolio. Which of these two stocks excites you most? Are you more bullish on the future of delivery or the transformation of finance? Let us know in the comments below. We'd love to hear your thoughts and see which stock is winning the community's vote. On to your next move. The future of finance is being written right now. Will you be a part of it? There you have it. SERV Robotics and Pagaya Technologies, two stocks analysts are flagging as major opportunities. SERV is tackling last-mile delivery with robots and a huge Uber partnership. PGY is using AI to transform lending. Both are disrupting massive markets with cutting-edge tech and strong Wall Street endorsements. Remember, every investment carries risk. Do your own research and make sure these fit your goals. Want exclusive stock tips and in-depth analysis? Join the Stocks Galore Patreon. Link in the description. Now, which stock do you think has more growth potential? SERV or PGY? Share your thoughts in the comments. Don't forget to like, subscribe, and hit the bell for more investing updates. Thanks for watching. See you in the next one.